All right. Good morning. Happy Monday. I was talking a couple of conversations that I had this weekend. Traders sent me this 5-hour long seminar by Douglas, Trading in the Zone. Mark Douglas. I don't. I never listened to it, and I've only read part of his book. I stopped reading it. One of his books, Trading in the Zone, I think. I stopped reading it after 93 pages was as far as I got. The only reason is because I felt like I knew where it was going because I had lived it. Shelley and I had a few conversations this week about Mark Douglas, and this weekend, well, one longer one. And we've discussed it before in group mentoring quite a while ago, but I don't know his Twitter handle, but we're going back and forth yesterday morning, just to kind of about the way that the world changed and trading has changed. So the way those two things tie in is that, this guy was a bean trader, and a big bean trader, very successful. And he and I seem to have very, very similar experiences. He's older than I am, so he had much more time. We had similar conversations or similar experiences in how the powers that be in the exchange used us to. Well, anyway, we just had some similar experiences. And then going back and reflecting on Mark Douglas, some of the Mark Douglas stuff that I was listening to. And talking to with Shelley, there isn't much under the sun that is new here, and I think that was a point that I was trying to make last week when I tweeted it. When I tweeted about how traders go on a rough run or they're not making money, they're frustrated, breaking even for too long, or still on the roller coaster. The snatching defeat out of victory has many different faces. Certainly trading in fear and not trading confidently are two of those things. But how do you break that down? Not being patient, not being disciplined. I don't like using those words because nobody ever breaks it down and explains it. And I'll explain it in a million ways during the day without ever using the words. So how do we understand what happens when we start to struggle? We start to look for other answers. The answers have to be in another study. I have to have more information or more knowledge or a deeper understanding of something. When that is not the answer, that is just simply not it. The answer is we have to have a deeper awareness and a deeper understanding of what we're bringing to the screens every single day. Remember the truism, or the study that everybody. Anyway, having the high and the low of the year, most of us would lose money. Having the high and the low of the quarter, most of us would lose money because of what we bring to the screens. Because and I don't like using the word greed or anything like that. And that came up in a conversation with a couple other traders this weekend. I don't like using those terms because they become like they become an excuse or an umbrella for us to, I was greedy. And so what's that mean? Just break it down. Keep it simple. We need a way of looking at the market. We need a way of seeing and visualizing the price action. A conversation that Jedi Marcus and I had in here on Friday, I think was very valuable. I wish it was recorded. And some of the best conversations happen when, spontaneously. And that was a really good one for a lot of reasons. So when we come before the screens every day and we realize that we are confident, carefree, fearless, or focused, or we don't, we realize that we've got things going on that are affecting our confidence, that are pushing us a little bit further into fear, or bringing about too many issues and things in our that we have in our lives that we are having a hard time leaving at the door of our office, then we have to cut our size or not trade. And today I go to my the uveitis specialist, and I'm expecting to get my first injection, my first injection into the eye. That's not thrilling to me, but yeah, actually it is thrilling to me. Damn, I mean, really, seriously, jab me in that eye so I can get this stuff arrested and save the sight. Save the sight so that I can continually do what I love doing, which is trading. It's difficult, but anyway, these things are putting some cares in my mind. They're bringing some pressure to bear, and I'm cognizant of it and I'm mindful of it. And so I'm going to be careful. I also know that I'll be in and out all day long with my wife, and we're becoming like two geriatric old couples. She's getting her first or second IV of iron. She's got to go to the doctor and get a bag of iron intravenously, and I'm going to get my eye injection. Holy cow! My son Danny was telling us that was telling me that we're like two old people. My God, we're too young to be old. Anyways, if you can recognize that you've got too many cares on your shoulders, that you are not as fearless as you need to be, that you're going to carry too much of yourself into the markets, too much of your opinion, too much of your bias, too much of your thoughts, too much of your feelings, too much of anything, then be mindful. And if you cannot check it at the door, as I did, as I described many times, as I'm walking onto the trading floor through that turnstile, it was very easy for me to separate what was going on in my life outside of there from what was going on in my life on the floor as I walked through that turnstile. It's more difficult, much more difficult at home. When I walk in through my office door, that's it. I'm at work. Nothing else matters. It's me and my process and the price action, and that's all. Here's the simple part of what we're doing today. This is it, okay? This is all. We don't move markets. I'm not a market maker. I'm a market taker. I am not here on the trading floor, I can move the NASDAQ 100 points or more by myself, just by myself. So many of us got whacked on when we started trading on the screens because we still thought that we were that trader, and you've heard me say this a million times. I don't know that without MF Global and without the failures in my business career, would I have had the opportunity to have become, and I mean the opportunity to have failed as badly as I did. It was a great opportunity. In free market capitalism, failing is an integral part of who we are. I don't know that I'd be who I am today if I hadn't failed as I did then. And I'm pretty grateful for who I am today. I'm grateful that I have the benefit of my experience, benefit of my knowledge, and that I turn inward so that I can change things on the outside. So fear has no place in my trading. I'm not afraid of the markets. I'm not afraid to lose money. I'm no longer afraid of success. I used to be afraid of that. I'm not afraid of anything. And when fear does creep in, whether it's health issues or, me or my family or you guys or anything, I'm more mindful of it. And maybe I become less aggressive because really it's this simple. The only thing I need to do is I need to recognize when the market, when the algos, when the HFTs and their algos are starting to create a groundswell that will become a wave. I don't make the groundswell anymore. I don't make the waves anymore. I just catch them and ride them. That's it. That's all we're doing here. Use the opening range, use our price points, and use our targets to determine what a groundswell is that is becoming a wave. And just how big is that wave? Well, we know that by, again, price. That's all. I don't care about time and I don't care about volume. I don't. I traded under Pete Stoudemire for 6-7 months when he was trying to update market profile, which to the man who invented it is no longer an effective, excuse me, it's no longer an effective, is no longer an effective trading strategy after the algorithms began to overtake or create most of the volume in 2003. So when I was trading with him and he couldn't update it, I stopped using volume as an indicator. Set the market into context for sure. As an indicator, the only thing that matters is price. So if we open here, we've opened here before and we've failed. And I rest assured there are going to be many traders right now that are looking to sell the open today. That happens, well, okay, we've got a system of looking at the market. So in the S&P, if today's opening range is someplace around this 2830 area, which I'd have to look at the historical opening ranges up here, but we have opened up here before and we broke right away from here. Let me see when it was. Last the 1st of May, we opened up at 20. 27.75 to 29.5. And that was the high of the day, right? I mean, we broke from there. So let's see if that's going to be the case today. But here's the point. At 8:25 Central Time, I don't need to know. I'm not going to be so confident, carefree, fearless, and focused that I'm going to bring too much of myself into the trading that I'm going to start to dictate to the market what it's going to do. That's what I was trying to say about the groundswell, the wave, that we used to create on the floor that we no longer do. All I have to do is surf it. So I'm going to use our opening range, and I'm going to let the market tell me what to do. If we get above today's opening range, then I will be long. And if we continue to rally, remember, don't fade late day or don't fade Monday strength. If we continue to rally on a Monday and we go parabolic and create a new all-time high, well, then here we go. We'll be long. It's difficult to be long at a new all-time high. It always is. But as long as we know where we're wrong, well, we can go ahead and take that trade. As long as we know where our outs are, we can take the trade. Where our outs are, both on the downside and on the upside, where we're getting out for an expense and where we're getting out for a profit. Let's keep our stops tight today. Let's keep our stops tight this week, so that we have expenses and not losses. A loss is going to be something that gets away from me, right? A loss is going to be something where I'm bringing my ego into it. I'm bringing my own thoughts into it. I'm bringing my own opinions and bias into it, whatever. An expense is I'm trading the market as it is, not as I want it to be. And I'm letting the market and the price action simply dictate my trade, and that's all. That's all. That's all. The time for thinking for me is before the market opens and after the market closes. When if I end up having a runaround today, then I'll start looking at the profile to determine whether or not I want to carry it, or I'll look at the MACD or I don't know, GAN or whatever, whatever studies that we use. I'll look at those to help me determine whether or not I'm going to keep that position. The point is that during the day, as a trader, it is really, really simple. On the trading floor, it was different, but on the screens, I am paid to react. I'm not paid to think. I'm paid to react. As a trader, my job is I'm paid to react, and I'm not paid to think. I'm a market taker, not a market maker. I know that these are cliches. I use them. I turn them into cliches so that they stick in our minds. These are little things that I've written all over, notebooks and notepads and sticky notes and stuff that I've had all over the place. That's all. I'm paid to react. I'm not paid to think. I'll think before the market opens, and I'll think after the market closes. But during the day, I have a plan. I have a process. I know what I'm going to be doing when the market gets up to 34, 36, or 42, 44 in the S&P. I know what I'll be doing if the market gets down to 1820. That's it, right? I know what I'll be doing because I've got a plan. I've worked on it. I've refined it this morning, and I'm going to react to it. So everybody trade with confidence today. Before the market opens, take a series of deep breaths. Breathe in confidence and breathe out fear. Breathe in confidence, breathe out fear. Slow your heart rates down so that you can see the price action on the screen in slow motion when other people are seeing it chaotically. Have a wonderful day, everybody. Have a wonderful week. God bless you all.